Dividend-paying stocks. What is dividend-paying stocks? Dividend-paying stocks are stocks issued by companies that pay a portion of their profits or earnings to their shareholders as dividends. A dividend is a distribution of a portion of a company's profits to its shareholders, usually paid in cash, but it can also be in the form of additional shares of stock or other property. Companies that pay dividends are generally established and mature businesses that generate stable earnings and cash flows. Investors who invest in dividend-paying stocks may do so to receive a steady stream of income from their investments. Dividend-paying stocks are typically less volatile than growth stocks because they are not as dependent on future growth to generate returns. However, it's important to note that not all companies pay dividends. Some companies, particularly younger and more fast-growing companies, may choose to reinvest their earnings back into the business to fuel growth and expansion. Dividend-paying stocks are stocks issued by companies that choose to distribute a portion of their earnings to their shareholders in the form of dividends. Dividends are typically paid out in cash, but they can also be paid out in the form of additional shares of stock or other property. Companies that pay dividends are usually well-established and profitable companies that generate a steady stream of earnings and cash flows. They may operate in mature industries and have a well-established customer base. Because these companies generate stable earnings and cash flows, they are able to pay out a portion of their profits to shareholders as dividends. Investors who invest in dividend-paying stocks are typically seeking a steady stream of income from their investments. Dividends can provide a reliable source of income, especially for retirees or other investors who are looking to supplement their income. In addition, dividend-paying stocks can offer investors some protection against inflation, as the dividends paid out by these stocks may increase over time. Dividend-paying stocks are typically less volatile than growth stocks, which are stocks issued by companies that are expected to grow rapidly in the future. Because dividend-paying companies are typically well-established and generate stable earnings and cash flows, their stock prices are less likely to fluctuate dramatically based on changes in future growth prospects. However, it's important to note that not all companies pay dividends. Some companies, particularly younger and more fast-growing companies, may choose to reinvest their earnings back into the business to fuel growth and expansion. These companies may not pay dividends, but they may offer investors the potential for higher returns through capital appreciation as the company grows and becomes more profitable.